this is a fascinating trade. Okay, so firstly, I've switched to looking at EuroStoxx instead of the DAX. The thinking was that they should be kind of similar, but the EuroStoxx is, peaked at 3 to 4,000, while the DAX was, I think, 12,500. The point being that this lets me lower my leverage. So the scale of my bets are more what I'm comfortable with. So using the EuroStoxx, the average true range is about, I think, 60 or 70, so it's smaller. So then I had a look, and the basic qualitative features of the two were the same. So then what did I do? So, we were long the market as it broke the 200. So here the black line is the 200-day moving average. The red is the 50-day, and the blue is the 20. So when it broke down, and we had flagged that the markets looked like they were going to fall around about September, October. That's in an earlier lesson. It's basically looking at, I think, maybe monthly or that kind of chart, and it's nothing complicated. It's just that, every month the market goes up, 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 and then it goes down and down, down. It doesn't like hanging around. So we went through a period of up, 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 and then we went through a couple of months where it was kind of flat. It seemed like, looking at some historical examples, it looked like what happens next is it goes down, 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 down. And on top of that, the last several times the market fell in about, I think, September or October. So that was the depth of analysis done. It's not nothing. I don't know anything more than that. That was all I had to work with. But as it happened, it worked out well. The markets fell pretty much on time. What I didn't like was the leverage. That burnt me out. So I didn't make as much from the market as I otherwise would have. So that's why I kind of went, how can I lower the leverage? Even if I bet the smallest stake I could do was 0.5, that was a bit too big. So EuroStoxx gives me the resolution that I was looking for. Again, you might have far more resources to play with, and so that's not an issue for you. This was more like a training thing for me. So I pretty much had a couple of €100 in, as opposed to thousands or tens of thousands. So enough of the background. Now setting up the trade and why it's really interesting. So my call is the market. I said to the markets were going to fall in September, October, and I reckon it'll fall, and there's still a long way to fall, and it'll bottom around about March. That's just my. I'm not going to go into how I came to that conclusion, but that is my baseline scenario until the market tells me otherwise. So over here, when it started going back up again, I think I don't remember. I probably got out of the market around about here because I wanted to wait till the market showed signs of topping, of like this up move. This up move I saw as a counter trend move. I was expecting a lower high, so you know we have a high here, high here, high here. You know, we're in a sequence of lower highs. Again, it could be wrong. The markets could turn, and you know we don't have mathematical certainty where I can work out it's going to be 3,500 and then it's going to move exactly up by 1,500. You know, it is a largely random phenomena. Hence we use Kelly. We kind of go, okay, we want to control our risk. We want to take bets at the right time, not take bets of arbitrary scale. You know, we don't want to expose ourselves to unlimited risk. That's the rules of the game. So what I was waiting for at this stage was a test of the 200-day moving average. I mean, I don't remember specifically, but my vague recollection was that, you know, previously when the markets broke below the 200, it likes to kind of test it again before it can make the next move down. So, you know, at this stage, there's no point trying to call it a top, trying to short it. I wanted to see, you know, some price action that suggested that, okay, this might be the turning point. So I shorted around about here, and then I can put a stop loss a little bit over the 200-day moving average and play it from there. Maybe look for taking profit at double the risk I've taken on board, or using the Fibonacci levels. So what I did was I kind of went, okay, this was the high. It fell all the way down to here. Again, you could say, though, that's the significant low, but I just went for this. I kind of reckoned that is the lowest figure, the range we've been in. And then I used the Fibonacci retracements. And what do we find? Well, this is the 50% retracement over here. This is the 61.8. And typically, we'd be saying that this downtrend is over or is broken if the market retraces more than the 61.8%. So this would be the level that I was looking at. And what happens? That also happens to be the 200-day moving average. So, you know, this is the critical level. So I'll zoom in a bit more just to clean things up. And what happened? It reached, did it touch the 200? I think it remained just below. But that's when the immediate reaction was the market to fall. So I'm hoping that this will now keep falling. We'll see. My first target would be about 3,300. That is, you know, about my 2-to-1 risk ratio. You know, we see it bottomed around about here previously, so I reckon there's a good chance that they might touch down here. There's more reasons in that. I suppose I'm going on a bit here. So I won't show it, but I'll just mention it. If you plot the hourly chart, then the 200-hour line also seems to be significant, and that's around about here. So I would suspect the market is going to touch down to the 200-hour level. I would think that this will be a part of a bigger move, that, you know, so this is a, zoom back a bit more. So can I go down? Yeah. So, you know, if we've gone up, this is our down wave, we've retraced, we've broken lower, we've retraced, so we are free to move down to below 3,000. So there's a lot of potential profit to be made. So in short, I just wanted to mention these things. You know, the fact, so the important things are it's retraced just below the 61.8% Fibonacci level, but it didn't manage to reach that. It has retraced right up to the 200-day moving average, which we've seen is a really critical level, but it failed to touch that, and that's when it started falling. And finally, if I look at the RSI, the market went up to about 70. So it just hit the overbought level. It struggled to keep going up, and now it's starting to break down. So we have three reasons, as well as the bigger picture of it. I feel that it's going to fall till March-ish to make it a bet worth taking. So now fingers crossed.